We are back with earnings from ASML, one of the most important companies in the world. I'm Cory Johnson. This is Drill Down Earnings. I'm the Chief Market Strategist for Epistrophy Capital Research. And we look at ASML because it's one of the 50 most important companies in all of technology. You could argue it's the most important company in all of technology, if not all of the world. Second quarter earnings told us a lot. Was it a beat or a miss on Wall Street? Yeah, it was a beat, a little bit better than the estimates. That just means the estimators were conservative, kind of like I was in my estimates. But let's look at the actual business, what it actually did, the actual numbers. So 7.7 billion euro, we're going to talk in euros today, in net sales, 2.3 billion euro in net income. So really AI driving this growth with 23% year over year revenue increase. But let's look a little bit deeper beyond the headline numbers here. And upgrades drove gross margins up to 35% in this quarter. Just amazing gross margin number from a company that's selling a lot now and really profitable now as well. And a big recovery from where gross margins are. The chart I showed you goes only down to 25% because I want to show you the kind of the drama of this increase and improvement in gross margins over the course of the last 6 months. Now, I'm going to take you through four things. What they sell, what's driving those sales, how they sell it, and where they sold it. All really important here. So in this quarter, what do they sell? So these guys sell these incredible machines that make the AI revolution possible, that make graphic processors possible from NVIDIA and AMD, make the incredible high bandwidth memory from Micron and the like possible as well. And the technology keeps getting more and more impressive. In this quarter, the first shipment of their EXE5200B, there'll be a quiz later, the EXE5200B. Look, this is an amazing machine. It's a high-NA, extreme ultraviolet lithography platform. These things are the size of a bus. And they're extraordinarily expensive systems that can make these incredible wafers that are used to make these incredible chips at very infinitesimal scale, stacking these units on top of each other. It's just incredible what they do. And as a result of the complexity, their per machine prices for all of their machines, even averaged in, is going through the roof now. In this quarter, it was 73.6 million euro per machine. Super impressive here. Now, they don't just sell the machines, they service the machines. So importantly in this quarter, services were a big part of the mix. It was 27% of revenues, where the sales of the systems were 73%. And while the system growth slowed down a little bit, it's still double digits, 18% year over year. They did over 2 billion euro in services and field options. It provided a real boost in the quarter, 41% growth on a year-over-year basis, but it also helped them tick up the margins. There were upgrades that happened in the field because customers wanted more than they even expected and were able to upgrade those systems in the field. And what's really driving this? It is those expensive EUV machines. They do sell the RFE machines, the RFE dry machines, and other stuff. But in my chart, if you're watching us on Spotify or YouTube, you can see the EUV sales are just so important to this company. It's the most expensive things that they sell, and it's growing to be a significant portion of revenues. Now, where do they sell? I told you let's talk about that because that's so important right now with the geopolitical atmosphere about whether or not, in particular, we let China own the world of AI or not, and what does it mean for being able to make the chips with which AI is powered. So when we look at the quarter, we saw that 28% of revenues were from China. Taiwan bouncing back at 37%. Of course, we think Taiwan semi when we're looking at that. And USA now down to 10%. That's been a very volatile number. How much so? Let's look at it. So Taiwan had really drifted off quite a bit, but now they're accelerating now 290% year over year growth to about 2.691.1 euro in the quarter, billion euro, I should say. Super impressive. Now, US sales are so much higher than they had been, not where they were 2 quarters ago, but still $769 million in revenues in the quarter, 311% over the previous year. But China, while it's falling, again, let's compare those US numbers of about $770 million. China, although it's down from where it was, down 32% on a year-over-year basis. If the US is at 770 million, China is still buying $2.1 billion worth of gear, specifically $76.8 million worth of $billion worth of equipment in China. So China sales still so very important, even though ASML is limited in what they can sell to China. Now, we've seen some shifting in tariffs. We've seen some shifting in the controls over what they can sell. We saw it specifically with software this last week, where the US backed off their insistence that China not be allowed to buy the best software from the likes of Cadence Design, and yes, Synopsys, a favorite company around here. And Synopsys suddenly completing this merger deal as soon as that restriction was lifted, is a giant over $30 billion merger with Ansys. So we want to watch what's happening here with China. And what we are told by ASML is that they're no longer going to give us guidance. They just don't know what's up with tariffs. So they can't provide forward bookings guidance after this quarter. And that was a concern for the markets. The stock sold off 9%, really on that fear of uncertainty. And stock's now down 30% in the last year. Now, steady growth of their business worldwide has helped eclipse a decline in China, but China still matters for this company. So how does a company try to figure out what they're going to do in the future? What does the outlook look like? Well, CEO Christophe Forquet, they do these wonderful video interviews with some in-house people at ASML that gives us some real context of what he sees. And frankly, he doesn't know what he's going to see in the future.
Obviously, when we send new systems to our customers in the United States, there could be tariffs on that. So that's the first one. The second is if we send parts for manufacturing in the United States. So that's the second component. The third component is if we send parts for service in the field operations in the United States. And the fourth one, to the extent that other countries would be putting tariffs on, parts or modules that get out of the United States into, for instance, the EU, that could be a fourth category. We're looking at all of those. We're trying to mitigate, the effect for the entire ecosystem, on all four of those accounts. Last time we spoke about free trade zones that we're looking into to mitigate some of the dynamic, and we are working with the supply chain and with our customers to at least make sure that the impact for ASML is as limited as possible. And then obviously there is the indirect impact, to what extent could tariffs, what kind of impact could it have on the overall macroeconomic situation? Quite frankly, Jim, it's all very uncertain, but both the direct and the indirect impact are still very uncertain. So we just have to navigate that as best as we can.
All right, so what's this all mean? What's your big drill down earnings takeaway? And what's the one number that tells us a whole lot, the drill down bite? Well, we have that. So ASML Q2 earnings, a really important quarter from the maybe most important quarter company in all of technology. Your essential summary tells you they did 7.7 billion euro in revenues, 2.3 billion euro in net income. That's a 23% increase in revenues on a year-over-year basis. But maybe the most important thing of the dynamics of what's happening in China, the company telling us that they don't know what's going to happen in China in the future. They don't know what's going to happen with tariffs in the future. They don't know what's going to happen with export controls. And even in the near future, as a result, they're dropping the vision that they give us, the guidance they give us in the future. And I want to show you that in the drill down earnings bite, the one number that tells us a whole lot. And that number is $2,076,800,000. That's how much revenue came from China in this quarter. It's an extraordinary number. It's almost three times what the US does in sales with ASML, and it's still down 32%, and we just don't know what's coming next for ASML and indeed sales to China. All right, thanks for checking out Drill Down Earnings. Check us out on all the socials, on X, on TikTok, on YouTube, and on Instagram. I'm Cory Johnson.